Hey, once again, this is not financial advice. I'm not an expert technical trader, but we have been pretty right on the money so far. We mentioned once we left this channel that there was a good chance that, in fact, because of everything that was going on, and we'll talk about that a little bit more, we would actually trade sideways. And in fact, we said maybe a little down, maybe a little up, but nothing too extravagant either way. And that's kind of what we've been doing. We've been trading pretty sideways. And the day on Thursday and Friday helped make that a little bit more sideways by coming down a little bit. So a little bit scary. And where does it move from here? That's the big question. You can see how quickly it shot down and then came right back up. What's going to happen today? You can see we're still within that doji area, so it's a little bit uncertain on Monday. And that, therein lies the problem, I suppose. We had mentioned looking at the 10-year. If you recall, we saw this triangle, and we pretty much said it was going to shoot up from there eventually, and it did. I think it shot up actually maybe a day earlier than we had thought. But, this was a Friday. I thought maybe it would make it through Friday. But it shot up, and I had mentioned, of course, that, we're only at the top of this triangle, and based off of the patterns of things, when it shoots up from, for example, this triangle, we had more to go. And that's exactly, what happened. We had a lot more to go. So what's happening today? Well, you can see that maybe it shot up a little bit too much. And so now it's retracing a little bit. My personal opinion is the interest rates will continue going up. I don't know exactly how much, but it has been going a little bit faster than I expected. I had expected it more so to be around here, start a new triangle, and you can see that it came back down, it shot back up, and so maybe we're forming a new triangle here, maybe a bigger or more likely, I think, or hopefully more likely for the market, a longer triangle. So even if it's going to be bigger, taller, whatever the case may be, right, if it comes back down here, it'll be longer. It'll take a little bit longer, because if we look at the 1 year in the Treasury, look how fast this thing is moving. We have these triangles, each bar is a day, it's just shooting up, 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 up. So now we're seeing live time here. It's coming back down to a few days ago. I think that's a positive thing. I personally think we've not seen the end of rates going up. Really what we kind of want is something akin to this, or maybe this if you want to be bullish in the market, where we're going to have a lot longer and people won't be as spooked. Why are people going to be spooked? Well, because if interest rates go up, that could be because of people expecting a lot of growth in the economy, but it could also be because people are worried about inflation, things like that. And therefore, if you are a bond trader, perhaps you think there's going to be growth in the market, but you're also worried about inflation, and so, you're not going to buy bonds for that cheap because you think you can get them for a lot more. And so that makes a lot of sense. You can see that it's a little bit overbought. The DMI has come quite far out beyond the buying pressure. We're not really oversold, though. So this could certainly go up a little bit more, I think. But my personal opinion is we might have a little bit of a longer triangle. We'll see what happens. It's really hard to tell with these interest rates. And then I'm sure, though, we have not seen the move upward. I don't think, for example, that this is going to move down. If it moved down, that would obviously be amazing for the market. But I don't think so. I think that, especially with inflation, expectations, and the Fed saying 3%, interest rates don't have to go to 3% because likely it wouldn't be. I think the Fed is signaling they're not worried about 3%, but they're not expecting 3% for a long time. So if you have 2%, for example, that might cover you over 10 years where, the interest rate maybe is a little bit lower than 2%. But I actually think that interest rates will likely get above 2%. And that's why we're seeing this really fast move up, because I think that a lot of the bond traders want to get a little bit more security, or a little bit higher in the interest rate, just so that they could have a 0% return even. I don't even think that they're looking for huge gains. I think they're just trying to outpace inflation. And, the Fed has said that they don't mind it being 3% for a few years. So if 10 years, there's a few years at 3%, you might have to balance that out with having a higher interest rate to get a 0% return. I think that's spooking the market a little bit. Market does not like inflation. And if we look at the 10-year, you can see over here, we still have this triangle that's still in play. So, especially with the 10-year coming down, could we see this thing shoot up to, the 405 level up here? Yeah, it's totally possible. At the same time, if, let's take off some of these indicators. If we see another down day in the market and it already shot down pretty far, well, if we move past this support, right, there's a lot of support here. A lot of support here. We're literally sitting on support, in my opinion, anyway. Look at all these bars in this area. We're sitting on support. And so if we break support, well, we could shoot down to these lows easily. And we have that bottom of the triangle, if you recall, all the way down at 369, which is near this Fibonacci level. So it's very possible that it comes down as well. So we are kind of sitting in the middle, and it could go either way. We're below the 10-day moving average, which is a little bit scary. And that is both a good thing and a bad thing. It's a good thing because we're pretty close where we could easily shoot above it, and then the 10-day moving average is support. It's a bad thing because if we keep going further down, it's a signal to those people who are invested in the market to be very nervous. Now, luckily, we have the 50-day moving average over here. So that will presumably provide some support. You can see it's providing support here in the past. So that will be pretty positive. Even if we come down, it would be pretty scary to me to break the 50-day support in one day. That would not be good. I think if that happened, for sure that we'd be going down to 369 very fast. I have no idea. But if we do land on it, then I think, it's a stone's throw away to 369. And we might have one of these situations, which you're seeing over here, where, you have this huge oversold situation, and then it rebounds. And, we'll have to see exactly what happens, the 10-year and interest rates and, policy, government, all those things go together when people are looking at the market. But right now, in my opinion, we're kind of in the middle. This still could trade easily sideways. That is totally part of the game plan as well. As the 10-year kind of trades sideways, I think it's very possible for the market also to trade sideways as they're uncertain what's going to happen. Nevertheless, I do think that there's a good chance we could go either way, and so you got to be prepared. You got to balance your options, in my opinion. You got to balance things out so that whether the market moves fast down or up, and I think that's the situation that we're getting into as we've traded sideways, right? Remember, when we said it was trading sideways, is because we were really far from the 10-day moving average. So we had to trade sideways, I had said, because you need that 10-day moving average to catch up. Well, that light blue line here has caught up. In fact, we've moved below it. So is that going to be a catalyst, especially with the 10-year moving down, for this thing to shoot up? That is totally, totally possible. Sadly, it's also very possible for it to shoot down. Right now, I'm leaning, if I had to pick a direction, which I really would not, and I want to be really, really clear about that, I would not pick a direction right now. We have no real trend here. We have no overbought, oversold condition. And so for me, it's hard for me to pick any direction. If I really, really had to pick, especially since the 10-year has calmed down a little bit, I mean, it's pretty much at the highs of a few days ago, but it has calmed down, when it lost a few basis points. So if that continues into market, I think there's a good chance we might actually see the market pick up, and we could actually move across that 10-day moving average. That would be really positive, and we could be really, really bullish. The only problem with that is, as I've been saying before, as the market moves up, it allows, I think, in my opinion, these people who are trading the bond market, it gives them almost some sort of permission to be able to say, oh, okay, yeah, the market's doing well, we can push rates up. And as you push rates up, the market will slow down. The bond market will be a little bit nervous, right? These people who trade bonds, in my opinion, they probably also have institutional money that, banks and things like that are also in the market. So I don't think they want to see the market crash. I don't think that's their plan. And you can see we're pretty far from the 10-day moving average over here. And so it's likely that this will trade sideways a little bit. And here you can see it even traded down for the 10-day moving average to catch up. But how many days? Are we talking about the end of the week? We're already going to be, forget about at 176. I assume we'll be back up there very soon. The question is, are we going to move even higher? And I think yes. I think there's a good chance by Friday we're going to be moving higher, certainly than 169. But, who knows? Maybe we'll have one of these situations where we actually move below the 10-day moving average for a little bit before we shoot back up. But, so that's my perspective. Right now, the 10-day moving is moving down. But as this thing moves up, we're going to see more and more of that interest rate going up. We're obviously going to see more market money coming into the market just because of all the stimulus checks, and as people go back to work, they'll have more money, they'll feel a little bit more secure. Certainly, if we move down, I am assuming we're going to touch the 50-day moving average. I don't think we'll break it in one day necessarily, but we'll have to see what's going on exactly and where things lie. But like I said, right now my leaning is towards a really nice positive bull day, but anything is in the cards, and it's the only slightest leaning. Me personally, I have options moving both ways. I think we'll see a lot of movement in the market. Down to the 50-day moving average is another, I guess not so far, but it's another 5-6 points in the SPY. It's not a small move, it's not a big move, but up, it will be a big move. And if I'm right about it going up, and that's the slightest leaning, it might be a pretty big day move up. And if that happens, we might be a little too far from the 10-day moving average as well, which means we might have to slow down. We'll see what happens. And good luck with everyone trading. I just thought I'd give just one more update. It's been a few days as it's trade sideways, and as I'd mentioned that it would, the 10-day moving average would really have to catch up. Well, it has, so I thought I'd give another update. Thanks for watching, liking, commenting, and hopefully I'll release a video on Tesla pretty soon. And good luck to everyone.